Hello and welcome. The demand for the effective sterilisation of medical equipment is one that is unlikely to ever change. So Mark is confident he's onto a winner with his holdings in Tristel, the inventors of a patented biocide which is effective across a wide range of medical applications. Anyway, he's arrived today wearing green scrubs and purple latex gloves, so let's hear what he has to say about Tristel in this, episode 23 of the Desert Island Investor. This episode of the podcast is generously hosted by Progressive Equity Research. Visit their website at progressive-research.com. Good afternoon, Mark.
Good afternoon, Paul.
Tristel plc, ticker symbol TSTL, is in the business of infection protection, based around chlorine dioxide, where they have a unique formulation protected by patents. It is a high-strength disinfectant that is called a biocide against microbial organisms. All very tech. I can see that certain element of moat exists with this stock, and that's something that you look for. So what is your history with this holding?
Well, I first purchased back in July 2017 at £2.55 and then made a smaller addition sometime later from some accrued dividends in August 2020 at £4.18 3/4. And we've not touched it since over those 4 years.
And as usual, can we have the base numbers, please?
Well, it's got a market cap of 237 million, a yield of 2.1% and a PE of 46.7. And that's based on the share price at the moment of £4.98.
So that's a stretched PE, Mark, from memory. Is that perhaps the biggest we've covered?
I think it probably is. Ever since I became aware of Tristel, it's been seen as a growth stock. When I paid £2.55, I suppose it wasn't considered cheap back then. I did have that little addition in 2020, which was perhaps an insignificant trifle, but perhaps I've let this one run away from me a little bit rather than going big at the off.
Now, this recording is on the back of a recent trading update for the year, ending 30th of June 2024. So what did that contain?
Well, it was short but very sweet. When an RNS comes out, you quickly scan the first few sentences for keywords for the tone of what's to follow, and this contained strong and robust, which boded well. Sometimes they contain words like challenging, headwinds, disappointing, delays, or broadly in line, things like that. So revenues for the year were up 16.4% to 41.9 million against 36 million. That's ahead of market expectations and above the company's performance target. And revenue growth was ahead of the annual average of 10 to 15% over the 3 years. And adjusted profit before tax will be no less than 8 million ahead of market expectations again, and 29% ahead of last year. So Tristel, it says, continues to be debt-free and cash generative, and the cash balance at the end of the year was 11.6 million, up from 9.5 the previous year. So the news was well received by the market, and shares were marked up 7% in early trading.
Okay, we had penciled in this podcast for around this time because historically Tristel have held an open day in July, which I believe you have previously attended.
Yes, I've attended this. I think it may have been 4 times now, and consists of a marquee being erected outside the company premises. And this usually coincides with the trading statement. There is a presentation, Q&A, and then the opportunity to mingle around the building and interact and chat with various members of staff and have presentations and demonstrations of the various products on offer. It's always been a very polished day, well attended, and it has helped my greater understanding of the business. I've also attended a presentation that they held once down in the city when I was down there on some other business.
But no open day this year.
I did reach out to one of my contacts a few weeks ago, somebody within the business, and they advised that it was unlikely to occur due to the changing CEO. New CEOs coming in September, so the timing I would suspect wasn't ideal, and I think it would be rather invidious for the current CEO to be quizzed on the business and its future, and perhaps make future guidance where the onus will be on somebody else to deliver what, not exactly what he's promised, but indicates. So it's probably the best decision whilst the changing of the guard takes place.
So, CEO departing, what's the reason for that?
Well, going back to the AGM statement on the 19th of December last year, 2023, Paul Swinney, the CEO, announced his intention to retire within the next 12 months. And with any departure, people always look for some skullduggery, but he co-founded the company that was to become Tristel in 1993, and since that time, he's been the CEO. His fingerprints are all over the business. It's been a tremendous success, and I'm sure it's something of a cliche, but it's his baby. But he's now 66, and perhaps understandably, he just wants to do something else with his time and smell the roses. I retired from working at 53, so another 13 years would feel like a real slog. Or maybe he fancies a little cameo somewhere else, perhaps on that nice, cosy non-exec circuit. Who knows?
He does leave, however, with the company having achieved a particular breakthrough, I believe.
Yes, for years, Tristel have been attempting to break into the US market, and for this, they need FDA approval. Now, they've received some criticism over the years. This has been a drawn-out process and an absorbed resource, but Paul and the team have finally got this over the line. In June 2023, they received this FDA approval, and this was followed by Health Canada in January of this year. So this has been for the ULT product. Now, this is used for the disinfection of endocavity probes, which enter natural orifices, and I'll let you work out what those are. And and also skin surface transducers that run over the body. In September 2022, Tristel teamed up with Parker Laboratories, who are based in Fairfield, New Jersey, and they're a manufacturing and distribution partner. Now, Parker manufactured their first batch in October 2023 and made their first sale just the following month. So this is an exciting development. Obviously, the US is a massive market, and they believe this represents a $100 million revenue opportunity for Tristel and Parker. Now, Tristel will receive a 24% royalty on all sales. Now Parker are a key partner as they manufacture transmission gels, and they actually invented them in the 1950s and remain a market leader. Now, this is the membrane that the skin surface transducer runs over and improves the screen image. So you can see the attraction. They've got the existing contacts, they've got an immediate in, and it can be a one-stop shop. We can sell you both the gel and the disinfectant.
Yep. Royalties can be very lucrative as there's no capital involved.
Yeah, it's 100% gross profit. Now, at the interim results, Tristel's gross margin was already a heady 84%, so this can only help the cause.
So what is the background of the new CEO?
Well, this is a gentleman called Matthew Sassoni, I think it is, if I'm pronouncing that my Italian pronunciation there. I think that means Saxon, actually, in Italian. And we've had a brief and pleasant exchange. I'll just read out the RNS that came out in June announcing his department. It said, Matt joins Tristel from Massimo Corporation. The ticker's MASI on NASDAQ. It's a global medical technology company where he is Senior Vice President of Marketing. During his tenure at Massimo, Matt lived and worked in the USA, gaining invaluable experience in the American healthcare market. He has over 27 years' experience in the medical industry in various sales, marketing, business development, and senior management roles. He joined the board of AIM-listed cardiovascular monitoring company Lidco Group in June 2015, becoming CEO in August 2015. And Lidco was bought for $31 million by Massimo in February 2021. Now, Matt started his career in sales for Quintiles in 1996. He spent 12 years at Smiths Medical in various sales, marketing, and business development roles, achieving the role of managing director, Northern and Eastern Europe and Russia in 2010. And he had full profit and loss responsibility for 300 employees and £150 million of revenue. In 2012, he moved over to Arjo Huntley, a division of Genting Group, as Senior Vice President of Global Marketing, and was Chief Marketing Officer of Marquette, which had a turnover of 1.1 billion in intensive care, surgery, and anesthesia systems. And that was also a division of Genting. Now, Matt has a degree in biochemistry with microbiology, a diploma in management studies, and a CEM diploma, whatever one of those is. Now, to me, that looks like a very strong fit, Paul. He knows AIM, he knows microbiology, and he knows the US market. So what's not to like?
Okay, so you mentioned the potential in the US, but where are Tristel's major markets?
In the 2023 annual report, they detailed 13 overseas trading subsidiaries. They've got 7 throughout Europe, and then there's China, Hong Kong, Malaysia, Singapore, Australia, and New Zealand, the US, and also they've got further subsidiaries that aren't trading yet, not generating any sales. That's Japan, India, Spain, and Ireland. Now, some of these subsidiaries are former distributors that they bought out, and they've got a total of 60 employees in these roles. Now, on top of this, they've got further distributors that are listed on their global map of their website, and these are places like Chile, some SCAN countries, some Southern and Eastern European, Turkey, Middle East, Canada, South Korea, Philippines, Indonesia, and others. Now, in 2023, they sold in 26 countries besides where their own subsidiaries are situated. So it does appear that it's a model where you need boots on the ground and local knowledge, and all sales are exclusive to hospitals. So it's a precise market, and it looks like you need to know how it operates. So as an aside, one of the attractions of dealing with hospitals is the creditworthiness of your customers. If we look at the UK, we're not expecting the NHS to go bust. And on the whole, these are developed or rapidly developing economies where you'd expect there is affordability and also the demand for a standard of healthcare that necessitates a high focus on hygiene for both patients and staff. And I would suggest that further economies will follow suit in their expectations. If we look at how China and India have emerged as economic powers in the last 40 years, their people expect much better. There's a lot more professions, and they've got a consumer economy. And in the year ended 2023, 65% of sales were overseas. So this is another of our export champions for our UK PLC.
Right, back to basics then. What do Tristel actually do? I understand that they operate across 2 divisions.
Yes, they have a medical devices side where medical professionals use the Tristel product to thoroughly disinfect a device in between patients. And then there's a product called Cash, which is for disinfecting surfaces. Now, broadly, the device side is around 10 times the size of Cash. But they believe that the global size of the latter market is around £4 billion. So this will encompass all kinds of products, including what we're familiar with on an everyday basis, bleach. And they believe this could grow to where it's in parity with the devices side. So it's a little like Concurrent that we covered recently when we spoke with Miles Adcock, and they believe that the systems side could be equal in time to that of the boards. It would transform the profile of the business and give it a great element of diversification.
What are the advantages of the Tristel product with regards the larger medical devices side then?
Well, when I speak to Elaine, who had a career in nursing, she remembers the days when devices were decontaminated just by sitting them in a bucket of fluid. So that was hardly high tech, and perhaps gives her age away a little bit. But some devices or instruments are are disinfected in a machine. A major one is called a trophon, and this uses a different compound, hydrogen peroxide. I'm no chemist. I suppose that works on a similar basis to like a dishwasher. I remember back to children's milk bottles sterilizers, but they're just using hot water. It's a device to you insert something and clean it. But these things take time. Outside a doctor's surgery, there'll be queues of people all day waiting to undergo similar diagnostic treatment. You need turnaround, especially following COVID. And there's been a huge backlog of cases that have accrued. In this case, the saying that time is money is as true as ever. And Tristel product can disinfect an instrument or a device in 2 minutes, and a trophon machine requires 7. So if you multiply that over a working day, you can see how that affects your throughput. And some devices are too big for a machine, and a machine needs to be plugged in. If you're in a backwater of some developing nation trying to administer healthcare, then sometimes mains electricity is not available. But what the people want across the world is a high level of healthcare and cleanliness, and safety is paramount. Wiping it under your armpit and shouting "next patient, please" just isn't an option. And also, the Tristel product is mobile. You can easily carry it around, unlike pushing a machine. And a machine requires some form of upfront capital expenditure, maintenance, and things can happen. It could just blow a fuse.
Getting back to the moat, which we talked about earlier, how much protection do the patents provide?
Well, as of the 30th of June 2023, they had 142 patents. Now, do you remember the Davy safety lamp from school, Paul?
No, we had electric lights in our school, Mark.
No, I mean learning about it, Paul. So Humphrey Davy. So he was more known for the safety lamp, but apparently he was the first person to prepare chlorine dioxide back in 1811. So it's been around a long time. And in presentations, Paul Sweeney has described the basic chemistry as quite simple. They react, I think it's sodium chloride with citric acid. But in order for the reaction to take place as quickly as it does and have a neutral pH, then there's some particular chemistry that's embedded into the formulation. So it's a bit like me. I know the words to My Way, but I can't quite sing it like Frank Sinatra. Now, these various patents will fall away, but presumably replaced by others. But for anybody wanting to go after that extremely high margins that Tristel enjoy, they'd have to plough in a lot of resource. They'd be up against Tristel, who've got an entrenched position. They've got subsidiaries that know the local market and hospitals who know them. And as a salesman, I know full well how difficult it is to dislodge an incumbent supplier when somebody's just got a product that works.
This looks like a really good business then. It has the moat that you do look for. But it does look very expensive.
Yes, that PE is in the 40s, and that's based on the last full year when it had a revenue of 36 million, and profit before tax was 4.3 million, and it's valued at 237 million. So there's a lot, and I mean a lot of future growth factored in now. We do, of course, have those brief but core details from the trading update this week, and these allow us to see the growth since the last year end, and we can formulate our own calculations based on this limited data ahead of the full year results being released in another 3 months' time. So I would say don't just diarise the preliminary results and the interims. Be aware of those trading updates and when they're due.
Do you not feel tempted to sell and redirect the funds into something that offers more value?
Yeah, good. It's a good question. Yes, the valuation is certainly leggy, but if you look at their history, they have had around a 15% CAGR since they came into the market in 2005. And we've talked about the power of compounding. If that carries on, and it is an if, then it can eat away significantly at that peak. Now, I understand that in only 2 years has that revenue growth paused for breath. And one of those was during COVID, when largely all procedures were cancelled. And now they've broken into North America. I'm sure that you know, things will be there will be an increase in demand as standards rise. And I'm here on this desert island, and if I'm going to be marooned for 10 years and unable to tamper with the portfolio, where might Tristel be then?
And what about adding?
Well, it's unlikely at this level, but you never know. Should there be a pullback, and it would have to be a significant one, something that was overdone relative to the fortunes of the business, that may prove an opportunity. But it has never looked particularly cheap, so I could be stuck in this hold limbo for some time.
So whereabouts does it sit in the portfolio?
It's a little over 1%, so holding it, even if conventionally expensive, is not a problem. I'm sat on a paper profit. It's been increasing profits along its trajectory, but given its weighting, you wouldn't call it mission critical if it disappeared overnight. Again, if I sell, I lose all that background knowledge that I wouldn't have with a new holding. And besides, there are not that many companies out there that fit my selection criteria, and I'm not really embarrassed with opportunities.
Of course, they pay a dividend. So are you being paid to wait?
Yes, interestingly, last year they changed the dividend policy. The company's policy has been to pay out half of the adjusted earnings per share to shareholders in the form of an ordinary dividend each year. Now, this policy has now changed, and in future, dividends will increase annually in line with the year's increase in earnings per share, committing to a minimum dividend growth of 5%. So the dividend is not massive, but again, use that phrase, it helps the cause, and I can recycle that into other holdings.
Well, it's okay to have a policy, but that's not really a guarantee, is it?
Yeah, that's right. It's a bold statement and a sign of confidence in the future, but it's not like a government bond. If the fortunes of the company wane and there's some black swan event, even then any previous dividend policy is not impervious to that. So the Tristel interims were very strong. With revenue was up 20% and profit before tax up 34%. And the interim dividend doubled to 5.24 pence. Now, I've had a look all the way back to 2005 when it was initially listed, and Tristel have paid a dividend every year. Back in 2005, it was just a halfpenny, half pence, and revenue was a paltry 3 million. So you can see how this business has grown. For the full year 2023, this was 10.5 pence dividend. So it's profit before tax for the half year is now above what its annual turnover was. So I think, given how small the revenue was, and despite this being a growth business, I think they recognise how important some element of dividend is to shareholders. The dividend growth has not been unbroken since 2005. But it certainly has been over the last decade, and there's been some special dividends thrown in too. So those last trading update figures also show the growth momentum.
Of course, we are beyond the year end, but this is not reported until around October. So those base numbers that you mentioned were calculated using the results from over 12 months ago.
Yes, we're backward looking, and we're presently having to look back some considerable distance. We have the interims and we've got that trading update, but platforms base their data on the last full year. Now, the market cap is the market cap, but the P and the dividend are calculated based on fixed historical data at the year end and the up-to-date number, the share price. Now, I didn't give that yield as 2.1%, and that is based on a total dividend to 10.5p, 2.62 pence interim, and 7.88 pence final dividend. Now, we've got that share price at £4.98. However, since we've had an interim this year, the previous one can fall out, can drop out the equation, just to make this a little bit more up to date. And if we add that the final 7.88 plus that 5.24, which was doubled, that's 13.12 pence, and suddenly this is 2.6%. Now, that makes it look a little bit more like a dividend stock. Now it matches just 0.5%, but if you look at the difference between in money received, the difference between 2.6 and 2.1% is an increase of 24%.
And given those levels of profitability, it has that net cash that you like.
Yes, at the interims, they had net cash of 10.8 million and 11.6 at the year end. And that's a lot against that revenue of 41.9 million, but perhaps not a lot set aside that market cap.
Okay, well, we've discussed various aspects of your investments over time, and we've seen a stark difference in the approach to shareholders from the excellent to the woeful. Where would you place Tristel on that, or Tristel on that scale?
Yeah, I place them at the top end. I've always found them engaging and willing to educate me, and I think rightly they see their shareholders as an asset and not a threat. Tristel have a number of institutional investors, but they've not shunned us PIs. Ahead of this podcast, I sent them an email asking if the usual trading update will be released in July, and I had a very prompt reply back from Paul Swinney himself, advising this will be in the second half of July. I understand that they allowed themselves some latitude regarding the actual date, but really that's as much as you can ask for. And Paul really has done a sterling job. It's a life's work. And although I'll not see him again in an official capacity at Tristel, then hopefully I might meet him in the future just simply as a fellow shareholder. Perhaps we should devise, Paul, a shareholder engagementometer.
Well, when you're following companies for your average private investor, it can be very demanding, not just with the financial language involved, but that of the particular field of business, depending on that field.
Yeah. Annual reports and presentations are often littered with all kinds of financial terms for obvious reasons, and they're not directed at the layman. And it can be a grind if every other word is an acronym, an industry term, or a financial ratio. Now, with Tristel, they use chemistry, which can be confusing, and they use words like biocidal, sporicidal, endocavity, ascendoscopes, laryngoscopes, cardiac echo probes, ultrasound probes, tonometers, etc., etc. And you could easily find yourself zoning out. And what this business does is manufacture a high-strength disinfectant that can be used to clean devices with funny names. And these got things like COVID, MRSA, SARS, and it can also be used to clean services. And they deal exclusively with hospitals. They've got a multinational footprint. They've got a multitude of patents. They've got a head start on any competition, and they just deal exclusively with hospitals. And that's how I try and frame it for myself, so I can understand the business. Contagious viruses will always be with us, and they've a habit of adapting. They notice when we found something to keep it at bay, they adapt and find another way to try and damage us. And it's a kind of an arms race. So they'll always be with us. There'll always be needs for some kind of disinfectant. And Paul, in conclusion, you've worked in various industries. You've worked in print packaging, retail shipping, and others, and you've seen plenty of life. Just any parting thoughts? What do you think of this as an area of business to be involved in?
Well, I don't feel remotely qualified to comment on that, to be honest with you, Mark. I mean, most of the things you've just discussed, the only thing made any sense to me was cavities. So I think I should defer judgment on that and leave it to the experts like yourself. But it does sound, from an investment point of view, sounds like a very good business, and it's proving to be by the looks of it. So that's about it then. We concluded with that, yes?
Yeah, I think so, Paul. Yeah, I think we've run through that pretty good.
All right, thank you very much indeed, Mark, for that review of your holding in Tristel. Well, that's all for this episode. We hope that you enjoyed it. Please remember the content is for information only, and it is not financial advice. If you have a question for Mark for our Question in a Bottle podcast, just complete the form on our website, thedesertislandinvestor.co.uk. Thanks again for listening. See you next time.